Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial world and make sense of all the mumbo jumbo. Today we're looking at NuCana PLC and their latest report from August 2025. A report that highlights their financial performance and what's happening behind the scenes. Before we dive in, if you love getting these clear, no-nonsense explanations of company filings, make sure you hit subscribe. We also have a fantastic community over on Discord, linked below, where we break down more of these reports together. So let's get into what NuCana has been up to. This report is all about NuCana's second quarter financial results for 2025, and they've given us a look at their financial health. Think of this as a checkup on how the company is doing financially, especially in the second quarter of 2025. What's really important here is that they've attached their financial statements and a discussion about their financial condition and results. Let's talk about the numbers. They provided unaudited financial statements for the period ending June 30, 2025. This means they're giving us a snapshot of their financial situation mid-year and comparing it to the same time last year, 2024. This comparison is crucial because it helps us see if they are growing or shrinking and by how much. Companies release these reports to keep investors informed about their performance. It's like checking your bank account to see how much money you have and if you're spending more than you're earning. When we look at the equity section of their financials, we see details about their shares. For instance, the number of ordinary shares and the value attributed to them, like ordinary share capital and deferred share capital. These are important because they represent ownership in the company. Changes here can indicate if the company is issuing new shares, buying them back, or if there have been significant events affecting shareholder value. We also see mentions of warrants like Series A and Series B warrants. Warrants are like options that give the holder the right to buy shares at a specific price. When these appear in financial statements, especially as outstanding at a certain date, it means that there's a potential for more shares to be issued in the future. This can affect the total number of shares and thus the earnings per share for existing shareholders. It's something to keep an eye on as it can dilute ownership if the warrants are exercised. Now let's talk about retained earnings. This is the part of the company's profit that is kept and reinvested back into the business instead of being paid out to shareholders as dividends. A growing retained earnings balance generally suggests the company is profitable and reinvesting wisely for future growth. Looking at the figures from 2023, 2024 and into 2025, we can see if this accumulation of profits is consistent. A strong retained earnings figure is a good sign of financial health and a commitment to long-term growth. Then there's the share premium. This is the extra amount investors pay for a company's shares above their face value or par value. When a company issues new shares, the amount received above the nominal value goes into this share premium account. A healthy share premium often indicates successful share issuances and investor confidence. Tracking this over time shows how the market values the company's equity. For example, if the company raised a lot of money by selling shares at a high price, this number would be significant. We also have the reserve of exchange differences on translation. This account deals with how a company accounts for gains or losses that happen when its financial statements are translated from one currency to another. If NuCana operates in different countries and uses different currencies, fluctuations in exchange rates can impact the value of their assets and liabilities when reported in their primary reporting currency, which is likely either GBP or USD given the filing. A rising balance here could mean favorable currency movements for the company. The long-term incentive plan is also mentioned. This is very common in public companies. It's basically a way to reward employees, often executives, based on the company's long-term performance. This usually involves giving them shares or options to buy shares. When this is highlighted, it means a portion of equity is set aside for these incentive plans. It's a way to align the interests of employees with those of shareholders, encouraging them to work towards the company's success over several years. Scroll now, grant date June 2020 0252. Member QTQ, then we see specific grant dates like June 2025 among the share option related items. This indicates when certain stock options or awards were granted to individuals, typically as part of their compensation. The fact that they're detailing these specific grant dates and linking them with the number of shares and vesting schedules shows a very granular approach to equity compensation, which can be important for understanding stock dilution and executive compensation structures. Very granular approach to equity compensation, which can be important for understanding stock dilution and executive compensation structures. On the demographic side of things, the filing mentions country of domicile and foreign countries. This is important for understanding where the company is legally based and where its operations are spread. For NuCana PSE, a UK-based company, mentioning the country of domicile likely refers to the United Kingdom, while foreign countries could refer to operations or significant holdings in other nations. This context is useful for understanding regulatory environments and geographical risks or opportunities. An ATM program, which stands for At the Market Program, is also noted. This is a way for companies to sell their stock gradually to the public at prevailing market prices, usually through a broker. It's often used to raise capital flexibly. When you see this, it means the company has the ability to issue more shares opportunistically without a big fanfare of a private placement or a secondary offering. It's a common tool for ongoing financing. And then we see a tag for major ordinary share transactions. This points to significant events involving the company's common stock during the reporting period. These could be things like issuing new shares, repurchasing shares, or other large-scale movements that could impact the stock price. It signals that significant corporate actions are being disclosed, and investors should pay close attention to the details of these transactions. Within these transactions, they specifically mention ordinary shares. This is the most common type of stock. The number of ordinary shares outstanding is a key metric for investors, as it forms the basis for calculating earnings per share basis. Fluctuations in this number, whether an increase from new issuances or a decrease from buybacks, directly impact this critical figure. We also see Series A warrants mentioned. Similar to the Series B warrants, these represent rights to purchase shares at a set price. The distinction between Series A and Series B often relates to different terms, strike prices or issuance dates, potentially reflecting different fundraising rounds or agreements. Tracking these specific warrant types helps in understanding the various layers of potential equity dilution and future capital raising mechanisms. There's also a mention of ADS, which stands for American Depositary Shares. These are negotiable certificates issued by a US depository bank. They represent a specified number of securities of a foreign company. For a company like NuCana PSC, which is based in the UK, ADSs make it easier for US investors to buy and hold shares in the company as they trade on US exchanges. Their presence in the filing indicates their accessibility to the US market. And then there's the pre-funded warrant. These are a bit different from regular warrants, as they often come with a stipulation that they are immediately exercisable and do not require any additional cash payment from the holder upon exercise, essentially acting as a substitute for outright share ownership from the get-go. They are often issued in private placements and are designed to avoid certain ownership limitations. They're a financial instrument that offers a pathway to full ownership without the immediate cash outlay. Now let's transition to my take on all of this. Looking at NuCana's filing, we see a company actively managing its capital structure and financial reporting. The consistent reporting across different periods allows for trend analysis, and it appears they are diligently accounting for various financial instruments like warrants and incentive plans. The presence of an ATM program and notes on major ordinary share transactions suggests a company that is actively seeking to manage its liquidity and potentially grow through strategic equity actions. The mention of various reserves such as share premium, retained earnings, and translation reserves gives us insight into the sources and uses of capital. A healthy share premium and growing retained earnings, for example, would signal investor confidence and successful reinvestment of profits respectively. The focus on different classes of warrants and share capital also points to a complex but potentially well-structured approach to financing and shareholder agreements. However, it's always important to look past the names and understand the numbers behind them. While this filing doesn't give us specific figures in this particular text, the very existence and categorization of items like warrants and incentive plans highlight potential dilution for existing shareholders if these instruments are exercised or vested. The company's ability to consistently meet its financial reporting obligations, including the detailed disclosure of these items, is a sign of good corporate governance. A key risk for companies like NuCana, especially in the biotech or pharma space, where innovation is key, is the success of their product pipeline and clinical trials. While this specific filing focuses on financial results, the underlying business health heavily depends on scientific and regulatory progress. Any delays or failures in drug development can significantly impact financial performance and investor sentiment. In conclusion, NuCana PLC appears to be a company with a structured financial strategy, utilizing various instruments to finance its operations and reward its stakeholders. The detailed disclosures, including different types of warrants and share capital, offer transparency into their financial dealings. Investors should continue to monitor their progress, especially in relation to their research and development efforts, as this will be the primary driver of their long-term value creation. Alright, that's our breakdown of NuCana's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description for more. Thanks for watching. See you next time.